So this is extremely distressing news. We knew this was going to come at some point. We knew there was going to be a hit to the Canadian economy, and now it is here. So the question is, now what? First of all, what does this mean for interest rates? Because the Bank of Canada, of course, watches these numbers extremely closely. They haven't changed the rate in a little while, currently set at 2.75%, the interest rate. That very likely could be in play again on September 17th when the bank announces its next change to the interest rates, very likely to come down at least a little bit. The market pricing in about a 50% chance currently of an interest rate cut. In large part also because Canada is doing pretty well at controlling inflation. So this is always the risk, and you see this happening in the United States, the debate over the Fed in the U.S. about whether or not they should accede to Donald Trump's repeated demands to lower interest rates at the risk of driving up inflation because of the United States has put tariffs pretty much on all imports into their country. So that's a different balancing act than we have here in Canada. The bank's got a little bit of more wiggle room here to move. We could move to reduced interest rates without potentially causing a spike in inflation. That's the balancing act that Tiff Macklem, the governor of the Bank of Canada, is going to have to do. And of course, that's a job that Mark Carney, current Prime Minister, used to do as well when he was governor of the Bank of Canada. So he's obviously looking at these numbers very, very closely. We'll see later today what response we get, if any, from the federal government to these numbers. But as I say, we knew this was coming. We knew we were going to face a economic downturn at some point. The question is now is how much further does it go?